What's going on, guys? What's up? What's up? What's up? Get started here just a second. Let everyone trickle in real quick. Give it a minute or two. Let me close this out real quick. There we go. Perfect. What's going on, Renee? What's going on, Ahmed? What a start to the week. I don't think anyone expected it to be like this much of an onslaught. I kind of expected a little bit of a slow start to the week per se, just knowing the fact that we have data coming up. But damn, that morning chop that we got this morning was a hell of a little chop. And it definitely kind of put you to sleep there. But the other part about that is that you definitely had probably gotten chewed up there if you held for longer than you should have. This is one of those mornings where it's definitely one of those learning type of lessons where if you know that you're pretty much at a disadvantage, if you see that there's nothing necessarily happening, where you get so much chop, yeah, if you ended up holding calls and you held until you basically got that pop that you got midday, that hopefully that ended up kind of counteracting your premium theta that you got chewed up on. But otherwise, this is just one of those days where if you see a quick 10, 12%, you wanted to just take your premium early and just be out and not have to sit through this. Just watching pain basically as you, especially those out of the money contracts just get chewed up today. This is exactly one of those kind of prime days that I say, you go back, look at what you did wrong, look at where you potentially were potentially green on your position, and then look to see how you can capitalize on that. But kind of giving you guys just the backdrop in terms of how the market's kind of just sitting here before I get into the levels. It's not, we're kind of sitting at a crucial level right now. This is either going to be one of those moments where we end up having a strong rally or we end up having a breakdown point. Now, right now, it's just market is just waiting on that CPI data. I think everyone realizes at this moment, CPI data is going to be the biggest thing right now, and we're likely going to see a little bit more of this relative weakness to flat price action until we get that data here on Wednesday. So we have another day tomorrow. It could be entirely possible that we get a little bit of a gap down, and then we start to see a recovery slowly tomorrow until that data comes out Wednesday morning. So I'm not expecting a huge price action here during the hours tomorrow. Just to be honest with you, I would expect that either we're gonna end up seeing a gap up tomorrow, we hold flat, or we see a gap down and we see a slow recovery tomorrow. So that's gonna be pretty much the either or. But I don't think that I think the bigger move is gonna be overnight, is what I would say. Giving you that macro backdrop right now, though, just setting up. If you guys actually remember, last week we had an amazing job report number. We got more than like 120,000 job numbers actually than the market expected. On top of that, we also had the yield curve pretty much inverted yet again. That was the third time that it's actually happened since March. So that was another backdrop right now. And so, pretty much just looking at the inflation data going into this coming week, obviously it's expected to be hot. But now you also do have the 75 basis point rate hike that's potentially on the horizon. Even on, I don't think the inflation is going to have an impact whether we get the 75 or not. I still think it's going to be 75 basis points regardless. That's just pretty much what I expect personally. So all that pretty much combined, it's not smelling good for the market. Now, here's the flip side of that is that you could potentially get just a quick pop out of the CPI data, in which we've seen when we get market data, you get the immediate reaction. It's the wrong reaction. That might end up being the play here, in which we get the quick pop, immediate pop, and then we're not going to necessarily close out the week on a strong note. That's something that's pretty much on the back of my mind right now is that just trying to play out how this may end up going is either we see that we have an onslaught of just bleeding going into the CPI data, and then we just have a nice pop, like I'm kind of expecting, off of that immediate reaction, and then we go right back down, or we just continue to bleed into the CPI data and we can close the week potentially strong. That's kind of just the flip side of what I'm looking at. But the macro drop, nothing is looking like it's a healthy sign that we're going to stay elevated, is my bigger sentiment that I want to echo to everyone. All right. So you are threading thin waters right now. So this is the time where you definitely want to be very careful with the size of your position and the overnight positions that you hold is what I wanted to mention. Bigger part of that. All right. Getting into SPY real quick then. As we pretty much get we had that nice little, I want to say a little bit of a pop towards the end of the day. It was nothing meaningful. That lunch hour pop that we had was a lot more of a bigger move that we had towards the end of power hour there. But I'm kind of just sitting in this little bit of a range that we're sitting right now. 383 half to 384 half is just that little bit of a cushion that we have. That we're just going a little bit sideways right now to me. If we end up breaking down below 383 half, I think that's where we're going to smell towards a gap down overnight here. If we can't hold that overnight. And I have us coming down to that 380. We may even smack down towards 378 if we really start to flush overnight. Otherwise, I'm going to look to see if we can get a nice little pop here over that 384 half. That puts us right back over that COVID anchored view up that we have, the little yellow anchored view up, 384.33 to be exact. And then we can start to push back up towards 387 to 387 half potentially, is what I'm going to look at for the upside here tomorrow. So that's kind of where I just say I think your upside is a little bit more limited than your downside, because if we end up getting a move to the upside, it's not going to be as greater as if we get a move to the downside. So that's kind of how I just see it. 387 half is potentially my upside, but my downside is just more greater, in which we can trade down towards even 378. All right. So that's just the levels in which particularly I'm looking at. But you have a little bit of a cushion right now, 383 half to 384 half. I think that's your little bit of a cushion that you're pretty much just trading in right now. As you see, after hours, we're just over that 384 half mark. That is pretty much wicking over, you could say. So let's see how that ends up playing out. But then if we get the gap down tomorrow, I think we should be getting some kind of slow little bit of a recovery. But it's just going to be another day where you want to pretty much secure your profits pretty quickly, as it will likely end up being relatively choppy yet again. All right. As far as the watch list, pretty much there's nothing that stands out that I want to say, just because there's pretty much either or. As you go into the data, the pretty much your wiggle room that you have is not as, pretty much convincing right now. Like if I pull up a Tesla chart, obviously we saw the relative weakness out of a Tesla here today. That was pretty much one thing that actually stood out to me early on, is that we've been seeing how strong Apple and Tesla have been relatively through this entire little bit of a rally that we've had. But right now, Tesla and Apple actually showed their weakness today. That's going to be something to pretty much keep a lookout on tomorrow. Do they continue to show their weakness as they did today? Or do we see a nice little snapback if the market is somehow green tomorrow? But what I meant by a little bit of a tight range is that you can see that you're kind of sitting in is a nice little wedge action here right now. And this is where I'm just waiting to see at what point do we end up breaking out of this wedge. And if I kind of just blow up this little wedge here right now, you see that you're basically just sitting right at the halfway mark of this entire little wedge that you have right now. So either you get a retracement back to the upside here, you could push potentially up towards 724, 733. Otherwise, if you get to the breakdown here, now you're looking at under 692, and you can trade this down easily down towards the 673 mark. So that's where it's like you're in the middle of a wedge right now. It's a dicey spot. You get the move to the upside, you're playing the levels to the upside. It's just not a matter of being biased towards one direction or the other, because you're dead smack in the middle of a wedge. That's not giving you any kind of pattern or so. That's giving kind of swaying me towards one direction or the other. All right. So that's just giving you an example, and a lot of these the big tech names relatively look like that right now. Like here's a Meta. You have a little bit of a descending, broadening wedge type action. You have a relatively flat top. As you saw, the Twitter news pretty much impacted with Elon dropping his takeover offer. Basically, you see pretty much the social media stocks taking a hit. Meta followed suit right with that, and we see it taking a hit. So if I was inclined to say that one actually has more of a weight towards the downside in terms of sentiment and momentum, I would say Meta would be one of those names. As you see, it's down 4.5% today. That is one of those names where you say you can have a potential continuation very easily, rather towards the downside. Even if the market is green tomorrow, Meta might end up actually being one of those that show your relative weakness tomorrow. So this is one that I would keep an eye on. I would watch this one under 161 half. You get this under 161 half. I still have this trading down towards 157 here, roughly, is what I actually have as my potential short-term zone for your next bounce. All right. So 161 half, though, that's the line in the sand for Meta. That's where I'm going to be looking at. It's either going to be a potential dip by the dip spot, as we saw that was near your lows today. Otherwise, you break down under the 161 half, and you can trade this down to 157. All right. Jesse, what's going on? Sids, Elon is giving up on Twitter. Yes, he is. I think one of the biggest things was that we had the little rumors about the fact that Twitter has so many fake accounts. I don't know if that was necessarily what bothered him more so. I didn't kind of read the details too much or really see much of the details, but it looks like Twitter had a lot of fake accounts and he didn't like all pretty much, the behind the door things that were basically being held from him. So that's probably one of the two things that just kind of felt like it was going to be the fall off. But we saw on Friday afternoon, once we got the news, we saw Tesla pop. We saw it tried the whole pre market. But once it ended up fading and we saw this break pretty much under that 700 mark, that was just, it just faded. So that was just relative weakness. And I can't say that enough. But I don't expect, as much as I kind of expected the stock to hold up on a positive sentiment as we had it up after hours on Friday, I was like, if the market sentiment starts to pretty much give us a U-turn, it can be only be so much longer that Tesla was going to hold up. And we haven't seen Tesla down what $50 in a day for I want to say quite a few days, maybe a few weeks already. So that's just something that kind of just stood out, and I'm going to be keeping an eye on that relative weakness here tomorrow. All right. Jesse, can I give you the 411 on the T triple Q? I'll take a peep at it for you. Let's see what's going on. Actually, it looks like someone actually had me look at this before. I had a pretty important zone sitting here. Excuse me. And pretty important zone sitting right around this 26 half to 26 high is what I was looking at. Once you ended up breaking, as you pretty much you saw, you broke under that 26 high. That basically took out from Friday's low of that 26.71. You see that you basically got the breakdown. Now, where would I potentially look at for support on the triple Qs here? I would be looking at the 25 half. That's 25.44 to roughly be exact. That's where I would expect support to hold here going into tomorrow. If you can't hold that support level, then that's going to be a bit of more of a further breakdown in which you could trade this down towards 24 half. So that's about another dollar to the downside if that support doesn't hold. Otherwise, I'm going to be looking to see if we can reclaim this over 27. You reclaim 27, you're going to smack your head on some resistance right around this 28 half spot. That's going to be a tough resistance to get over. But then you can clearly see the gap fill that you have to the upside if you can crack over that 28 half. So that's pretty much just playing it, hindsight there. But if you're really looking at that cushion level, as I usually say for the up and under, you're looking at 20, 26 high to 27 is that range that you want to see you break above or break under. All right, and that's how I would go about playing that one. Other than that, let's see if there's anything else that kind of stood out to me. I think Boeing was one that I was watching here. I was looking at that one more so on the weekly. Those of you that kind of caught that, I think I posted it on Twitter if I'm not mistaken. This one had a nice little weekly bear flag. You see that little bear flag formation here. Watching this one to see if we crack under that 132 spot. You crack this under 132, then I think this is going to be a landslide in which it strays down towards 127. So that's one to keep an eye on. I'm going to keep watching that one. That's just a beautiful weekly bear flag here. And we know that Boeing has not been very kind to bull holders pretty much just because this thing has just been a waterfall more so. So that's just one to keep an eye on in terms of downside. I think that's an easy short right there just because it loves to fade with the market bleeding. Let's see, SIDS, Moderna. Moderna was definitely one that was my favorite last week. It's definitely pretty high on my radar right now for this one, and I saw it pop about $3 some change. I think about late morning this today, but we couldn't have a continuation, and that's why I turned my attention away from it. I didn't want to FOMO into it, but I am still looking at the continuation of this little megaphone actions more so what has my attention rather than the cup formation. I see how you say the cup formation. I could also pretty much give you a little bit of a double bottom action here as well. You put in a bottom here May 12th, and then you put in another bottom here that was pretty much equal to price out on June 16th. So you could say a double bottom, you could say a rounding bottom cup formation, but the megaphone is really more so what stands out to me. So I'm essentially looking at to take out this March 30th high that you have at 187. That's where I think the more explosive move is going to happen, and that 200 mark is going to be a magnet, more so as a mental number, which also has a little bit of a small gap fill here as well at that 200 mark. But 187 to me needs to pop, if I'm being honest with you, to just give me that quick landslide and quick swift move towards the 200 mark. Otherwise, I would expect 187 to be your resistance, and that's where you're gonna have a retracement on this little cup formation, and you likely get it maybe about a halfway back of this entire uptrend that you've gotten, and you likely even retrace down towards 153. As you see, that was roughly your resistance for quite a while before you were ultimately able to basically break out. If I drop that in white here, well, white doesn't stand out pretty much, but I'll put it in blue. So you see that's basically the halfway back of this little double bottom, little cup formation. If you were to smack resistance at 187, you're likely trading back down to 153 to retrace halfway of this, right? Otherwise, you crack the 187, you trade this to 200 pretty quickly, right into that gap fill that you have, that little small tiny gap right there. So that's pretty much just the flip side of either way. Now, to avoid the fake out, you want to see this crack 180 if you're trying to play it up to the 187 resistance. So you crack 180, you're looking at a $7 move to the resistance of 187. And then, like I said, 187 to 200. That looks like easy money right there. But I would assume that the market's going to have to be neutral to bullish in order to really get that further continuation above 187. All right. So that's going to be another thing you definitely want to keep in mind. All right. How about snow? Is it still good for a put play? I haven't looked at snow. I know that it was pretty relatively strong actually when we had the relief here, and it kind of looks a little bit like a little rising wedge action here. If I kind of plot this one out real quick, let's see if we can plot it out. Let's see if I get the resistance to line up here. There we go, and I'll drop it in green so it stands out. So here's our defined resistance. You see that you have 1 point uh, from May 25th, again June 2nd, and then we wicked that resistance June 6th, and we tried to pop it, but you see the fake out. So I see why you say it's short. It definitely looks like it's going to be potentially a beautiful short in the making here right now. If I were to pretty much tell you in terms of what level you're watching this one under here, you definitely want to crack this under. Thought I just had my wick here. All right, there we go. You definitely want to see us under 152. You crack 152, I think that's where the viable short comes into play, and you wouldn't necessarily get wicked out. But 152 needs to crack. You get this under 152, you could potentially look at 150 puts here, more or less. But I would see this trade down to 144 rather quickly. And why do I say 144 more so, right? The reason why I say 144, as I just changed that back, is that you see where you basically ended up breaking down. You teetered between support to resistance, ranging between the first to second week of May. Then you ended up hitting a resistance on a reversal yet again on June 23rd off of that 144 level. And then you broke down as resistance before ultimately getting that strong push towards the top end of this rising wedge. So 144 is that line in the sand that I would say is your support, but you're looking for a breakdown under 152. So that's about a near $8 downside sid that you're potentially looking at. You trade it down under 152 to 144, and that's where you look to take your profits potentially, or even leave runners, as you do also have a nice little gap fill here down at the bottom. And if the market does potentially look to roll over, then that's why you would keep a runner for this little potential gap fill that you have to the downside. All right. So hopefully that potentially helps you. But 152, that's the number to remember for your puts to pretty much be in play. All right. Other than that, I know that one maybe I should probably highlight is also Amazon. I know that Amazon does have, they have their Prime Day coming up. I believe it's the 13th and the 14th here of this week for Amazon Prime Day. I I know a lot of people are looking for the run up here. So I kind of get that idea. I will say though, I'm not feeling as bullish as a lot of people are looking at for Amazon in terms of the run up, just because of the fact that I want to say more so obviously the market sentiment, but on the back end of that also because of pretty much looking at um, the downtrend that you have. Right? There's nothing that says that you're gonna get a strong reversal off of this, because what I actually am looking at is, and I have a little bit of a descending channel action. You see your downtrend resistance basically from where your gap started to where you had your intermediate resistance from that stock split announcement, and gave you that reversal to the downside. But what I'm basically looking at, and not being biased in terms of directional movement, if you can crack over 114 half, up look towards the gap fill that you have, up towards 115 half. Otherwise, I'd be looking for the short opportunity here. You crack under this 111 spot, I think you trade this down to 106 half roughly, in which this has basically been your median for this entire overall downtrend for the past month, 2 months roughly, right? Because you can see that you basically teetered this little intermediate halfway of this descending channel, the little dotted blue line, has basically acted as either your gap down spot for continuation to the upside or downside, or you teetered it as a support to resistance. So I would anticipate that we likely end up testing this 106 half before we get any kind of reversal or potential earnings run up, you want to say, more so than getting an upside impact off of Prime Day. All right. But again, just being non-biased about it, you look for the break over the 114 half. You play the gap fill up towards 114, up to 115, and potentially get a stronger move to 117 of you breaking up your recent high from July 7th. Otherwise, I think you take this down under 111. The 106 half is still what I would be looking at in terms of downside. All right. So that's kind of just giving you the flip scenario. I mean, I'll have it on my radar. I'm not too high on it though. I think more so the downside is a lot greater than the upside that you have or you're looking at potentially. All right. Other than that, I think tomorrow I stay patient pretty much. Don't try to force a situation. If you didn't learn that through most of the chop here this morning that we've had, and we're just watching, or likely end up having watching your premium just get chewed away in that chop fest that we had today, this is one of those moments where, again, tomorrow, just keep it light. Wait for the CPI data to come out on Wednesday, and I think we'll have more viable trades that we can go off of on the back end of this week. All right. Other than that, though, I will pretty much conclude right there. I know that class is about to start with Sig and Dapper, so head over to class. But other than that,